Ever wondered how you can make your money work for you but feel overwhelmed by all the financial jargon? Well, you're not alone. The world of finance can seem like a maze of complex terms and concepts, enough to make anyone's head spin, but don't despair. We're here to guide you through this labyrinth, one step at a time. Today we're setting out on a journey to demystify the world of finance. We'll break down the barriers and cut through the jargon, paving the way for you to take control of your financial future. To help us do this, we're joined by an expert in the field. They've navigated these financial waters and they're here to share their wisdom with you. So whether you're looking to save for a rainy day, planning for retirement, or dreaming of that once-in-a-lifetime vacation, we're here to help you understand how your money can do more for you. Join us as we dive into the world of finance with our expert, making it simple and jargon-free. So, what is investing really about? Well, imagine planting a tree. You put a seed in the ground, nurture it, give it water and sunlight, and over time it grows. Investing works in a similar way. It's the act of putting your money, your seed, into opportunities, the ground, with the expectation that it will grow over time, giving you more money than you started with. When we talk about investing, we're talking about the future. We invest because we want a more financially secure future. We want to grow our wealth so that we can afford the things we need and want, whether that's a comfortable retirement, a house, or funding for a child's education. Investing is also about making your money work for you. Instead of you working for money, you're allowing your money to multiply itself. It's like having an army of tiny workers who are constantly laboring to make you richer. However, investing is not without risks. There's always a chance that the investments you make could lose value. This is why it's crucial to understand these risks before you dive in. It's like knowing the weather conditions before you plant that seed. If there's a storm coming, you might wait for a better time or choose a more resilient seed. Just like the tree, investing requires patience. It's not about getting rich quick, but about growing wealth over time. It might be tempting to pull the seed out of the ground to see if it's growing. But we all know that's not how it works. You have to give it time and the right conditions to grow. Investing also requires knowledge. You have to understand the different types of investment opportunities available to you and how they work. It's like knowing the difference between an apple tree and an oak tree. They both grow, but they require different conditions and give different results. Investing is about taking calculated risks for future profits, but how can a beginner start investing? That's a good question and one we'll delve into in the next segment, so stay tuned. For a beginner, what's the first step towards investing? Well, it isn't as intimidating as it may seem. Just like embarking on any new journey, the first step is often the most critical one, so let's break it down together. The very first step towards investing is setting clear, achievable financial goals. Are you saving for a new car, a house, or perhaps your retirement? These goals will shape your investment journey, determining not only the amount you need to set aside, but also the time frame for achieving these goals. Once you have your goals set, it's time to understand your risk tolerance. This is all about knowing how much risk you are comfortable with. It's a bit like going on a roller coaster ride. Some of us enjoy the adrenaline rush of the steep drops and fast turns, while others prefer a more gentle, steady ride. There's no right or wrong here. It's all about what suits you best. But remember, in the world of investing, higher risk often comes with the potential for higher returns and vice versa. So, it's essential to strike a balance that fits your financial goals and your comfort level with risk. Now, with your goals set and your risk tolerance understood, you're ready for the next step, researching your investment options. This is where you start learning about different types of investments like stocks, bonds, mutual funds, and more. Each of these has its own set of risks and rewards, and understanding them is crucial to making informed decisions. Don't be afraid to ask questions, seek advice, and learn as much as you can. After all, knowledge is your best ally in this journey. So, there you have it. Setting financial goals, understanding your risk tolerance, and researching your investment options are your first steps into the world of investing. Now that we have our first steps, what are some common mistakes to avoid? Well, that's a story for the next scene. Stay tuned. What are some common mistakes beginners make when they start investing? This is a question that piques the curiosity of many who are venturing into the financial world. Picture an eager novice investor ready to dive headfirst into the marketplace. One of the first blunders they might make is not diversifying their investments. To put it simply, they put all their eggs in one basket. This may seem like a quick route to success. If that one investment flourishes, so does their wealth. But what happens if it doesn't? Their entire financial future could crumble. Diversification is like a safety net. It spreads the risk across various investments, reducing the potential for catastrophic losses. The second common pitfall is letting emotions dictate investment decisions. The financial market can be a roller coaster ride with highs that spark joy and lows that cause anxiety. It's human nature to feel elated when our investments are doing well and panic when they're not. But making investment decisions based on these emotions can lead to poor choices. Remember, the market is a marathon, not a sprint. It's important to stay calm and stick to your investment strategy, regardless of the ups and downs. Another frequent mistake is not understanding the investment thoroughly. Every investment comes with its own set of rules, risks, and rewards. Jumping into an investment without fully understanding it is like navigating through a maze, blindfolded. It's crucial to do your homework, understand the ins and outs of your investment, and ensure it aligns with your financial goals and risk tolerance. In the world of investing, knowledge is power, and that power can help you steer clear of these common pitfalls, setting you on the path to financial success. Avoiding these pitfalls is essential, but how can we ensure our investments grow over time? The answer to this lies in the next segment, where we delve deeper into the strategies for growing your investments. Stay tuned. How can we ensure our investments grow over time? Here's the secret: there's no magic formula or one-size-fits-all answer. Growing investments is a process that requires patience, discipline, and a dash of knowledge. Let's break it down. One of the most effective ways to grow your investments is through regular investing. Think of it as a workout for your financial health. Just as you wouldn't expect to develop a six-pack after just one gym session, you can't expect your investments to skyrocket after a single investment. Regular investing is about consistency. It's about setting aside a portion of your income every month or every paycheck and committing it to your investment portfolio. This not only helps in accumulating wealth over time, but also takes advantage of the power of compounding, which Albert Einstein famously called the eighth wonder of the world. Next, let's talk about reinvesting profits. When your investments start to bear fruit, it's tempting to take the profits and splurge on a holiday or a new gadget. But the key to truly growing your investments is to reinvest those profits. By doing so, you're effectively increasing the amount of money that's working for you in the market. This is how wealth is built in the long run. Lastly, it's crucial to stay updated with market trends. The world of investing is dynamic and ever-changing. New sectors emerge, old ones evolve, and market sentiments shift. By keeping an eye on these trends, you can align your investment strategy accordingly, seize opportunities when they arise, and mitigate risks. Remember, knowledge is power. In conclusion, growing your investments is an ongoing journey. It's about regular investing, reinvesting profits, and staying informed about market trends. It's about making informed decisions and sticking to your plan no matter the market conditions. With these strategies, you're well on your way to making your money work for you. And remember, the journey of 1,000 miles begins with a single step. So take that step today. Your future self will thank you. So, what's the key takeaway for our beginners today? The crux of what we've been discussing revolves around a few key points. First off, understanding investing isn't rocket science. It's simply about putting your money to work, letting it grow over time. Next, remember, taking the first step is often the hardest. But once you've stepped into the world of investing, you've already won half the battle. Then we have the common pitfalls. We all make mistakes, but it's how we avoid repeating them that sets us apart. Stay vigilant and always be on the lookout for red flags. Lastly, let's talk about growth. Building your investments requires strategy and patience. It's all about finding the right balance and sticking to your plan. Remember, the journey of investing is a marathon, not a sprint. Start small, learn continuously, and watch your wealth grow.